Hello, everyone. So happy Monday. Hope you guys had a wonderful start to the week. The market is going to make a really big decision tomorrow. It's election day. So we're going to take a look at what the next steps are for the market. We're going to take a look at what my Discord has been doing as well. All in all, for the month of October, I have a 91% success rate. If you go into the daily recap channel, out of 59 trades, 54 of them worked, which is a 91.5% success rate. If you guys want access to the trades, my live entries and exit points for everything, as well as access to my TradingView indicator, access to the traders chat, access to me throughout the day, having the ability to ask me questions and ask members questions about things. The link to join is in my bio. You also get a beginner's track of how to learn, intermediate level track as well. So it's all in one package. So if you guys want access, the link to join is in my bio. October was amazing. November is going to be even better. It all starts with tomorrow. All right. So with election day, after that, we're going to have to see how things work out. So without further ado, let's get started with the video and check out what there is to look at. So number one, we're just going to shift through all of the different charts, and I'm going to give you guys my thought process. So yesterday night, I basically made a video saying, how the SPY looked bearish. It didn't make sense to add to new shorts. I would rather add to shorts up here at levels of resistance, etc., right? Well, obviously for day trading, that doesn't really apply. So what we ended up doing was for the day trades, we ended up going short right here. Right here at this candle is where we ended up going short. This candle right here. So we ended up catching a short to the exact minute. And of course, the market ended up just tumbling down to 568. And then my indicator caught the longs. It also caught the shorts up here, caught the longs down here. Did really well. But now what are the next steps? Okay, so now when we look at it on a daily chart, the market just closed. And what ended up happening is we closed at a major level of support at this 568 level. Like I said yesterday, going short at these levels does not make any sense. It's not a high quality trade setup. So with that being said, once again, there's two different choices to make. Either you can hold cash and wait for a better opportunity to go short, or you could go long and basically have a stop loss. The one trade you can't make is going short here, in my opinion. It doesn't make sense. So that is the main premise for the S&P and the overall market, honestly. The NASDAQ, similar situation to the SPY. This is not bullish. The IWM, also similar situation. We had a wick. This is a green candle. Obviously, the IWM did relatively well compared to the S&P and the NASDAQ today. But this is not in any way an automatic reason to start going long. But, it does look more bullish on paper than the SPY and the NASDAQ. With that being said, the other main things that we have to look at are the VIX and the bonds. Okay, so the VIX is still holding support. It is still holding above this 2021 area. And the VIX is important to watch and monitor because it has an inverse relationship to the market. If the VIX is doing well, that means the market should be falling. And the VIX is holding support. It looks like it wants to continue doing bullishly and go higher. So if that's the case and the VIX does rise, then that means the market should be falling. So this is obviously an issue because it's all very, very dependent on chip earnings. We have ARM and SMCI reporting earnings this week. And the main kahuna is obviously the elections. So there's some underlying weakness going on in the market. The fact that the VIX is holding this level of support really well. The fact that the S&P and the NASDAQ are all basically just chopping around at levels of support. It's going to be really interesting. But overall, we've positioned ourselves pretty well. We were short up here at the top. We went short NVIDIA, Meta, the S&P and the NASDAQ, and clearly it worked out. So that's good. But this is not a time where I would necessarily try to go long just yet. If there is going to be a bounce, we're going to fall much lower, most likely. Trying to go long here is not a high quality risk reward trade, in my opinion. So with that being said, we took a look at the indices. Took a look at the VIX. The bonds are still trying to bottom themselves out, as I showed in yesterday's video also. The bonds are important to monitor because they have a correlated relationship to the market. If the bonds are doing well, the overall market is also going to be doing well. So right now, you can see that the bonds are really trying to hold this bottom and bounce. If we end up bouncing above these major levels of resistance, that strength can easily permeate into the equities market. So with that being said, that's what it is on the bonds. Now, very, very simply, let's quickly just take a look at the large tech stocks. All right, so Apple, first and foremost. I was showing how Apple yesterday was outside of the lower level of the Bollinger Bands. We opened and closed again outside of the lower level of the Bollinger Bands. This tends to be the start of a good buying opportunity on Apple because of this weakness. So any weakness in these large tech stocks, when it's trading outside of the lower standard deviation, according to this Bollinger Band indicator, right? When we're opening and closing outside of the lower level, generally it is a good dip buying opportunity. If Apple ends up bouncing, maybe the strength in Apple can help propel the rest of the market. But all in all, right now, Apple showed this weakness due to earnings. So it's not a guarantee that we will end up bouncing aggressively, but generally when these large trillion-dollar companies are opening and closing outside of the lower Bollinger Bands, it tends to be a high-quality long opportunity. So Apple, that's what it's looking like. Amazon, we were very outside of the upper level of the Bollinger Bands, and what ended up happening today was we pulled back inside of it. So with these large companies, you could see that price action just wants to return within the mean for these larger time frames, and that's essentially what ended up happening on Amazon. Netflix is chopping around. Microsoft is still holding support. Looks very similar to the indices. Google is also just not. It's not really doing much. It's holding above 168, 167, but not entirely crazy movement. But Meta now, Meta is really, really starting to show a lot of weakness, and Meta can start pulling down into 550, 540 if the overall market starts to collapse. Meta is definitely going to collapse pretty hard, in my opinion. Meta looks pretty weak. So with that being said, we have a lot of companies not looking great. The only companies out of these large tech stocks that we saw, we have to take a look at NVIDIA and AMD as well. NVIDIA doesn't look great. Clearly, it's not able to break above 140. AMD is also clearly not looking great. So the only companies that look like good long opportunities on paper, sort of, are Apple and Microsoft. AMD, NVIDIA, these companies clearly showing weakness. That's the problem. Like, a lot of these companies are showing a lot of weakness, but you have Microsoft and Apple at levels of support. You have the S&P, you have the NASDAQ, you have the IWM at levels of support. So on paper, things don't look bullish. But the problem is that we are at levels of support on these companies. What happens next is entirely up to market makers, depending on the elections. And tomorrow, the day after tomorrow, is definitely going to be very, very crazy in the market. So I would probably wouldn't trade too heavily. it's going to be pretty interesting to see how everything responds and everything works out. But regardless, my thought process for the market overall, when we're looking at the S&P, it really, really just needs to break above 578, 579 for a continued move up, in my opinion. If we remain below 574, 573, then this can really start to collapse. But it's tough. It's literally like it depends on the elections. But just price action standpoint, just from a standpoint of price action, we are at all-time highs. Okay? We fell. Now we're at a level of support. Generally, what ends up happening is we get a bounce back into a level of resistance. At that point, that's when the market has to make a decision. And then you basically find a better shorting opportunity for another move lower. Currently, that's not happening. We're just continuing to show weakness either way. And we're just at this level of support showing weakness. That's not really an amazing long opportunity because we're still showing bearish momentum. So unless we can break and close back above 572, 573, things still look bearish to me on the S&P. Things still look bearish to me on the NASDAQ, large tech stocks, NVIDIA, AMD. Take a look at Tesla. But overall, all of these large tech stocks, everything does not look great. Immediately, though, it does look like we could get a bit of bounce. At that bounce, we could see what the next steps are. But for now, the VIX is holding support. The S&P is at support. It's showing weakness. It's showing bearish momentum. So I hope you guys enjoyed this video. I hope you guys learned a thing or two. If you guys enjoyed it, please drop a comment down below. Let me know what I could do better. Let me know what you guys liked. Let me know your thoughts. So hope you guys enjoyed today's video. Please make sure to like, comment, subscribe, do all that good stuff. And I'll see you guys tomorrow. Thank you.